Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about electric vehicle and renewable type metals. These are the ones that um, I'm invested in. Some of these, some of them I'm not, like lithium I'm not so much, but nickel I am, copper I am. And we're going to talk about that in this. There's going to be a nickel squeeze that's going to be coming up, probably a copper squeeze as well, aluminum squeeze. There's going to be a squeeze on a whole bunch of different metals. And I'm going to partake in some of it with some of the companies. I'm in the diversified mining companies, companies like Vale, VALE, BHP, Glencore, Anglo American Platinum. Uh, Tech Resources would be a good one to look into. There's a bunch. Those are just some to name a few. Norilsk Nickel. We're going to go in and we're going to look at some articles related to the battery metal type, um, the battery metals, and some of the squeezes that could potentially be coming. So let's dive in. I've got in the upper left, lithium prices rise on tight supply, strong China demand. It says the Chinese market participants were surprised that China's lithium prices continued to rise rapidly after the recent Lunar New Year's holidays, even though lithium producers in the country have resumed production this week. Even when those outputs are available, overall spot supply will still remain tight. Battery-grade lithium carbonate units are so scarce in the spot market that price is not the primary concern for downstream consumers. They are looking everywhere for available units. But there are few sellers who still have any spot supply, a third Chinese lithium producer source told Fast Markets. So it looks like lithium is in very tight supply, and this will slow down electric vehicle production at some point. And we really haven't increased the electric vehicle production that much. And I'll do another clip on that about what the penetration percent is and the percent of new vehicle sales and all that stuff. Now, scrolling on down, we've got the nickel supply squeeze could send prices even higher. It says the nickel market is experiencing its most significant supply squeeze since 2007. LME, I think it's London Metal Exchange, stocks have fallen every day since October last year. Even long-term contracts relating to spot prices and battery makers remain at risk of rising raw material costs. The culmination of the two has the most significant degree of tightening surprise and balance across the base metals in 2021, says Goldman Sachs. Reuters quoted the bank's estimate that the global nickel market registered a deficit of 159 metric tons in 2021, amended from an earlier prediction of a surplus of 49,000 tons. Goldman expects another smaller deficit of 30,000 tons this year. So does JP Morgan, who projects a 40,000 ton deficit in 2022. So nickel is running a deficit. It's been running a deficit from October of last year every single day. And I think nickel's a good spot to be. If we're going to run the EV route, I think we're going to have to consume more nickel. Nickel's used in the batteries in ever greater amounts. So that's, I think, a good spot to look at. Now, I'm going to go over here. It says Glencore and nickel supply talks with EV battery makers. It says a lot of the automobile guys and the battery guys are talking to us about nickel. So the battery boost, and I grabbed this from the article, it says demand from electric vehicle batteries will spur a group of metals. In 2019 versus 2030 demand growth, they've got nickel, aluminum going up dramatically, phosphorus and iron, copper, graphite, lithium, cobalt, and manganese. This is the demand increase from 2019 to 2030, 14 times, 13 times, 10 times, 9 times, and 3 times. The ones that I like, that I'm warming up to, aluminum, nickel, iron, I mean, all of these are going to be so great. Copper, I like a lot. Graphite, I haven't looked into it as much. I do have a couple of companies, but graphite, lithium, cobalt, I like these ones up here. Ones that run across the entire commodity range, like iron, I think are going to be a solid bet as well. It says nickel demand will grow significantly off the back of batteries and the EV thematic, and that will pull nickel prices up, BHP CEO Mike Henry said in an interview. Looking on over here, We've got copper price highest since October on supply squeeze. Copper could be heading towards super cycle territory in the medium term, with price levels expected to reach above $5 per pound in the medium term. Economist and commodity market specialist Patricia Moore told the audience in the AME conference. So copper is also joining in on this. And the way that I'm playing it is a nickel and copper royalty company, because those I think will be two very good metals. In it's Nova Royalties, the one I like. It's a small little company. It's a newer royalty company. They don't have a lot of paying royalties at the time, but it's more of a long-term pick. Looking at the LME warehousers, slash capacity as metal stocks drain away. So the London Metal Exchange warehousers, they're literally shrinking capacity because the metal stocks are going away. Their stock is being eaten up. It says the total LME registered storage space shrank by 290,500 square meters to 4.06 million square meters over the second half of 2021, reversing 5 consecutive quarters of expansion, which means that they are running deficits in the LME. So coming on down, this clear out of LME shadow stocks and the simultaneous decline in registered inventory attests to the scale of the supply gaps that have opened up across the metal markets. What is a bull signal for prices may be less good news for those in the business of storing excess metal. It's worth noting that all the core LME-based metals have been trading in backwardation. The cash premium spiking to extreme levels in the case of tin and copper at the times of last year. Yet, even these unprecedented cash premiums haven't attracted enough metal into the LME warrant to halt the overall slide in visible stocks. With ready-to-warrant shadow stocks almost gone in many cases, exchange warehousers are directly competing for units with physical buyers, who have been paying up record premiums to get the physical metal. Most analysts expect some easing of supply and logistics pressures this year, which may see some replenishment of depleted LME inventories. But the longer-term prognosis is that the world needs more metals such as copper, aluminum, and nickel to enable decarbonization. Producers' ability to deliver that extra metal while simultaneously cutting their own carbon emissions looks highly questionable right now. Supply deficits could become the new norm of the green revolution, which means less metal heading to terminal markets such as the LME. You can see why Glencore has decided to call time on its warehousing business. There may be more money to be made in supplying sought-after metal to the physical supply chain than storage market. Looking at the LME, SHFE, and COMEX, you can see these three metals, or these metals being drained from these three areas. And it's at a very low level in comparison to the recent history, the stocks. And that's what I've got for today, guys. I'll end it there. So the three metals that I really like, nickel, aluminum, and copper. Those are the three that I think are going to be needed coming up into the future for this. We'll call it, my kid just came up and hit me in the shoulder, if you want to know. Well, those three metals are going to be what I'm going to be invested in for this big bull market in renewable energy. So I'll end it there, guys. Hopefully you enjoy the content. Give me a thumbs up. Subscribe to the channel if you haven't already. This is Finding Value.